read a lot about risk management, which you read in my book and you read in Mark Minervini's book. Jesse Livermore actually is a fantastic example of why it's so important to manage your risk, because he became one of the richest men in the world from nothing. I mean, he was literally a boy grew up in poverty, becomes a trader in the late 1800s, just in these local, what we'll call bucket shops that existed, becomes one of the richest people in the world, then has some bad trades, loses everything. Because you have to conquer your own feelings and your own fears and your own greed in order to become a mature trader. A mature trader is not sweating all day, banging away on their keyboard. That's not a mature trader. A mature trader is somebody sitting back, confident in their own system, that they know how to do things, happy to execute sales of trade after trade that are unsuccessful, small loss, another small loss, and just kind of be philosophical about that, at the same time as having some big wins, which again, you mustn't get too carried away with. You've got to control your emotions in this game, because if you get too excited about the big win that you've had, then you might be tempted to hold on to it for even longer, or conversely, you might get so excited that you're like, I have to cash it in, and you cash it in early and the trade actually had a lot further to go. Nobody wants to keep losing and going, oh, I've lost again, oh, I've lost again, oh, I've lost again. It can sap your confidence if you're not sort of aware that what you're doing is part of the overall system and is a necessary part of it.
Hello and welcome to Money Magpie Invest podcast. I'm Jasmine Birtles, founder of MoneyMagpie.com. And before we get into the podcast, just want to remind you to make sure that you subscribe if you haven't already, like, comment. Do comment, because I'm always interested in what you have to say and I do reply. So make sure you comment. Got that out of the way. Now, my guest today is a really interesting guy called Glen Goodman. Now, Glen is a former TV reporter, and in fact, he and I have met at times through the TV reporting, and he's been a trader for 25 years and is the author of The Crypto Trader, which you can find on Amazon. Take a look. Glen, hello there.
Hello. Yes, I first interviewed you, I think, about 20 years ago when you were like 10 years old.
Yeah, 10.
Yeah.
That's absolutely right. Totally. Everyone believes me when I say
And
it.
already a money expert at that time.
Crazy, isn't it? Yes, just in nappies still, but no, very advanced for my age, absolutely. And Glen, I'm so impressed at the fact that you have actually transitioned. You did not that kind of transition, but a little while ago, you moved from being a TV reporter, which is, a great job, to really running your own life and supporting your whole family just by trading. How did you do it?
Well, basically, I was working as a TV reporter, as you say, first for the BBC and then for ITV News, and I had some luck / skill, I suppose. It took, as it does actually, with traders who are trying to actually really nail their craft. It takes some years usually to become consistently profitable. And I actually felt a lot better yesterday when I saw on Twitter this long list of loads of legendary traders, people like Paul Tudor Jones and various others, and on average they'd taken about 4 or 5 years to become profitable. And sure enough, I was at the BBC making mistake after mistake in my early days trading, and then reading tons of books and tons of articles, and years and years I just tried out all the different types of trading, all the different strategies there are, until I eventually settled on momentum and trend following, which is what I've been doing ever since. And then I started making money, and I had a big breakthrough in 2008 during the great financial crash, when I saw it coming to some degree and started shorting banking shares. and some other shares as well, but mainly banking shares. And obviously that turned out to be a pretty good thing to be doing while banks started collapsing all around us. And so then that was sort of my first sort of big nest or little nest egg, medium-sized nest egg. It was 100. I turned £3,000 into £100,000,
Oh, that's
and
pretty
so
good.
that was my first kind of. I've got this, and I wrote an article for the Times about how my little short, how I turned £3,000 into 100,000, like the film The Big Short and the
Yeah.
book, and then I started thinking about maybe giving up my job and trading full time. And a few years later, once I'd built up some more savings and some more confidence and kind of felt like, yeah, I think I could do this sustainably, that 2008 thing wasn't just a one-off. I needed to sort of prove to myself that I could make money year after year. And once I'd proved to myself I could do that, I quit my job to become a trader full time. And I got to watch my children as little kids growing up, which I wanted to do, and I got to work from home, and I got to have a nice lifestyle, and I live happily ever after, I think.
Yes. Gosh, well, it is the sort of thing that loads of people would like to do, to just do, let's be honest, a few minutes work here and there, because that's the way it sounds to me, what you do, apart from all the studying, etc. But, a few trades and then leave it, because you're not a day trader, are you?
That's right. Yeah, I should have stressed that right from the start, really, because that's what people usually think, is that you must be a day trader. You're just like sitting there all day going in, out, in, out, in, out. No. Day trading, I learned very early on, partly from a hard, painful experiences, is a very difficult game to succeed at as an individual, and actually has been getting harder and harder over the years because, of course, of the entrance of algorithms
Yeah.
and AI.
Mhm.
And when you're trading on a sort of second by second basis, who's going to win, you or the computer that is trading against you? Who thinks faster, me or the AI? So high frequency trading, as you may have heard of, or HFT, started gaining in popularity and in fame sort of a decade or more ago. And, as I say, things are only getting harder for the individual day trader. And the statistics have borne this out for decades anyway. Even before this rise of the computers, day traders were already at a massive disadvantage to other kinds of traders in terms of the percentage of them that were successful. And in recent studies that I've seen, typically you'll see something like maybe 2% or 3% of day traders are consistently successful long term. It's not very good odds. So I knew quite early on that I was better. I mean, I could go on about it all day, all the different reasons. It's not just the computers. There are loads of reasons why it's hard to day trade. Apart from anything else, you have to make on-the-spot decisions, which humans, being emotional creatures, are not very good at doing under pressure. We're much better when we've got more time to think about things. So my kind of trading involves holding positions typically for days, weeks, months, preferably, and sometimes even years I hold positions for. So, you could almost call me an investor at times, though I would never like to class myself as such, because I don't believe in investing based on sort of, fundamentals. Is this thing overvalued or undervalued? That's just not my technique. I'm willing to hold on to a share or a commodity or any other investment for as long as it continues to soar. And for example, that's the situation with me at the moment, where a lot of people bought gold and silver ages ago and then decided, oh no, it's gone up so far, I think I'm going to take some profits, and they're feeling pretty stupid, some months on after they took some profits on a high, because the prices continue to soar and continue to soar, kind of thing.
Hi, I'm going to quickly interrupt this amazing podcast to let you know that Money Magpie Invest has a bi-weekly newsletter where we share tips, tricks and insights to help you become a more confident investor. Our newsletter is completely free to sign up to, and it will arrive in your inbox on Saturdays at 12:30 p.m. As well as all of the super useful investing information, we also share exclusive deals from our partners. So if you're serious about building long-term wealth for yourself, I really recommend signing up. And you can find the link in the description of this podcast.
But how long do you keep your your money in your trades? So it's not a day. What is it? 2 days? Is it a month? Is it a year? How long
It
do you?
varies depending on what the trend looks like and how long the setup for the trend is. And what I mean by that is if a share, say, has been building a base for years, let's say it used to be sky high and then it fell out of favor. Maybe it had some problems. The company I'm talking about had some problems, and the shares fall into the well, first of all, they tend to collapse and there's all kinds of news stories, but then they fall into the doldrums and they just sit there for years and years. The newspapers no longer talk about the company, nobody's interested in the company. But then, say, after 5-10 years, you start hearing whispers that the company's kind of got its act together, and slowly but quietly, sort of in the background where nobody's really looking, the share price starts to perk up, and it starts to just, we all know what that looks like on a share price chart. So when you're looking at something like that for me would be a potential long-term trade, something that I might hold on to for months or even years. There's one share that comes to mind next, which I bought, must be about 15 years ago, or 10 or 15 years ago. I need to look that up, but maybe it was more like 10 years ago. But I held on to it for years and years because it just kept going up and up and up and up. And even though my family kept telling me, oh, but Next is like so uncool and people aren't buying stuff there, and you go in the shop and it just doesn't look that great. And, there are all kinds of doubts that people can put into your ears. But if the share price just keeps going up and up and up relentlessly, as it did for many years, it was only when the share price started faltering, which to me was a fairly clear sign that people who were early investors and maybe people in the know about the company itself were starting to sell in large numbers, which tends to cause the price of a share to start showing those telltale signs of reaching a top. It will start getting volatile at the top and then maybe take a dip down and then try and get back up again, but not quite get up as high as its all-time high. And these things I look out for. So basically, I sort of trade waves on an ocean,
Yes.
is a good way of describing it. Or like I say in The Crypto Trader, I use the analogy that I had a reader who was complaining about how in the first edition she was like, I can't get my head around these charts. I can't get my head around the maths of it. So instead of looking at graphs, I got AI to just take the chart of Bitcoin and turn it into a mountain range. And it looked exactly like a mountain range.
Yes.
And she was, as an artist, she was more able to get her head around it. Oh, okay, so it's more like climbing a mountain, and has its little peaks, and then it gets to the top and it's all sharp at the top, but then it's like declining, but then it doesn't get as high, and then a series
Yes.
of higher highs stepping
Yeah.
up and then lower lows stepping down.
That's the thing, that I mean, as you say, you're trend following. So when things are going up, you're buying. When they start to go down, you sell. But the question is, what you've mentioned a few, but what are the telltale signs that something is going to go down? Because most people who trade or invest, even, they tend to buy high and they sell low. Then
Yeah.
they don't realize. But you're doing the opposite, because proper investing, as we know, is buying low, selling high. But it's terribly easy to sell at the wrong time, because you might have just a little dip, and then it could go up a lot. But in that little dip, you might think, oh, well, I'll sell now. So how do you stop yourself from doing that? What are the signs?
Well, it's not just easy to sell at the wrong time, it's easy to buy at the wrong time. So as a trend follower, what I do is I buy late and I sell late. Ed Seykota, who a legendary American trader, one of the sort of founders, really, of trend following and systematic trading, he was programming early punch card computers in the 1960s to make the first ever sort of trading systems. A real pioneer, and he was a mentor of mine for some years. It was a great privilege for me, and he has a saying. You follow the trend until the end, when it bends. And I know that sounds like really simplistic, but simplistic is the way to become
Yeah.
successful as a trader. I mean, any successful trader will tell you that complicating things too much is a bad idea, and that keeping things simple is usually a good idea. Another famous acronym would be KISS, keep it simple, stupid.
Yes.
Uh, which again I adhere to. Now, when I say buying late and selling late, what that means in practical terms is you don't buy something that's on the way down as a trend follower because you don't know if it's going to keep going down and keep going down, or like, the hypothetical share that I referred to a couple of minutes ago, it might go down and then just stay down for 10 years. And you don't want your money tied up in something for 10 years that is not going to go up. That's a waste of money. It's a waste of opportunity because that money could be doing something useful in another share. So a trend follower waits until they see the signs of something bottoming out. So, for example, let's see. So it bottoms out like that, and it goes along sideways, and then it starts perking up. And when I see the signs that a chart, from having looked at a million of these charts, obviously I recognize the signs, but, my book has all sort of advice for patterns to spot in the data, and, how to spot those signs is hard for me to go into without, something on the screen to show you. But basically, you're looking for the chart to start perking up and then form a new uptrend. And so that means I'm buying late because I'm not buying right at the bottom. And that would hurt a lot of people mentally and emotionally, because they would be like, well, you're not getting a bargain. You've waited 2 months after it hit rock bottom, and now you're only thinking about buying now. But you can never buy too high is the real truth, because trends can go on and on and on for years, in many cases. And sometimes the trends are shorter, but either way, I will get out when they reach the top. So basically what you have is, let's say it's a trend that I hope will go on for years and years, and I'm buying early on in that trend, and then I'm holding it. But then before I know it, it's kind of reached a sort of plateau, and it dips down. Now that's when you have to start getting a little bit scared. Oh, it's dipped down. Is this a problem? No. Oh, look, it's recovered quite quickly and it's gone even higher. That's okay. That's a series of higher highs, as I said, which is what you would hope to get in a trend. But then if it gets somewhere and then it starts going like that sideways for ages, and it gets quite volatile and it's getting sideways, and then it dips down and then it goes back up, but it doesn't reach as high as it did before. And this is typically what we've got at the top of Bitcoin boom. So I was able to successfully publicly call the top of the 2017 boom, and I did the same in 2021. I was able to say to my followers on Twitter, and the original one, it was on Facebook in 2017, saying, warning, I don't like the look of this anymore. Something horrible is happening to this chart. And I say things along the lines of, I may not sell everything right now, but I'm going to be keeping a very close eye on it from now on, and I will be considering selling soon. Kind of those are the kind of tweets that I was putting out at the time. And sure enough, in 2017, after the market peaked, I was out of Bitcoin within days, and I was out of all my other cryptos within weeks, because I didn't sell them all at the same time. I watched each of their charts individually and waited for each of them to signal to me that it was no longer in an upward trend, and then I would sell. And so I was able to get out a trend like a good trend follower should, with most of the profit. So, if you imagine a trend starts here and it ends there, I get in there and I get out there. So I'm getting sort of, hopefully the 80% or so in the middle. And as one extremely famous legendary trader once said 100 years ago, he was talking about eighths. They used to measure the US market in eighths of a dollar. And he said, the bottom eighth and the top eighth are the most expensive eighths. So it's like, even back then he was saying, don't try and get those difficult to get bits at the top and the bottom.
Right. Yes. And
Wait for a trend, see the trend, get into the trend, wait for the trend to end, get out of the trend, the end.
And then, speaking of trends, I mean, you mentioned 2008. You made a good crop of money. I mean, turned £3,000 into £100,000 by shorting. So, do you short now? Is that part of your strategy to go for actually shorting stocks on crypto that you think are going to drop like a stone?
Sometimes, but not often. Shorting is a very difficult game to do well at for a number of reasons. The main reason actually is mathematical, and I describe it in the book. It's quite hard to describe on a podcast, but I'll give it a quick go. When you buy a share, say at £1 per share, if you're lucky, that share will go to £2 per share, £4 per share, £8 per share, it will keep doubling because things tend to go up proportionately, right? It's like, the company Apple. It didn't go up arithmetically. It didn't go $1, $2, $3 for forever like that. No, it went like $1, $2, $4, $8, $16 because as a company grows, it tends to grow in proportion to how big it already is, if you see what I mean.
Yeah.
That's how a company like Apple can become the biggest in the world, because if it went up just in steps 1, 2, 3, 4, 5, it would take 10,000 years to become the biggest company in the world, right? So that way you can make tons of money from shares going up, right? Because you buy it at $1 and before you know it, the thing's at $1,000 and you've turned $1 into 1,000. Or if you bought, say, £1,000 worth of the stuff in the first place, then you've now got $1 million. That's the magic of investing when it works like it should. But conversely, on the downside, the opposite happens. So if you're shorting, right, the share price might start falling very hard initially, but then it's got less far to fall. Do you see what I mean? So it's like it's halved, and then it's not just going to go, well, sometimes it will, but most of the time it won't just go half and then to zero. It won't go like half, I'm halving and I'm halving again to zero. It doesn't work like that. It goes, I'm halving, but then I'll halve what the price now is. So let's say it starts at $1. It might then go to 50 cents. I don't know why I'm talking in American language here, but $1, 50 cents. But then typically it might go to 25 cents and then to 12.5 cents and then to whatever was 6.75 cents. And, and keep halving in that way. So that means that if you've gone short at $1, you're typically going to make money slower and slower and slower as it gets towards zero. Whereas if you're buying on the way up, you will make money faster and faster and faster. That is the mathematical key difference and the reason why it's so much harder to make money shorting than it is going long. But it's not impossible, and there are times. But I take those opportunities on rare occasions. I wait for those perfect setups like the one in 2008 where the market was just the way the chart formed. It took about a year to sort of form a top, and then it just looked like it was about to fall off a cliff kind of thing. And indeed it did fall off a cliff at the perfect moment for me. It was like all my stars aligned. But like I say, that kind of opportunity doesn't come along very often in markets.
So if somebody's thinking, look, I'd really like to do what Glen's doing. I want to make money. I was going to say the easy way. It's not the easy way, but with small amounts of effort, frankly. What are the steps to start? Do you need to collect up a goodly amount of money in order to sort of start putting it in? And should you do all the reading and studying? What do you recommend people do?
Yeah, if you want to do it full time and it be your only job, then you need to build up a significant capital cushion, right? Because first of all, if you start with too little money, and when I say a significant capital cushion, I'm talking, it depends.
Yes.
It really depends how much your life expenses are, because you've got to pay for your life out of the trading proceeds. So I guess, realistically, at least, £100,000 or at the, God.
But that's what you put aside, do you
I think
mean?
you'd need a lot more than that these days, actually, because prices have gone up so much. But you need to be working in your job, putting money aside, maybe making money trading in your spare time, as I did, which increases your savings more quickly, but still keeping your regular job, because you're going to need that income until you're confident that A, you're really good at trading now, and B, you've got enough capital to be able to not have to take stupid risks. Because let's say you're starting with only £5,000, right? If you want to make meaningful profits that are actually worth having, then you're going to start investing, or trading, say, thousands of pounds on every trade. But the problem is that you're not going to get it right all the time. We've only talked about the positive aspects of trading really so far in this podcast, about how I can make money doing this. But the reality is, when you're trading trends, a lot of the time you're buying it as it starts going up and then it just fails. And it's like, oh, well, that wasn't supposed to happen. But the key thing is to get out quickly. That's my number one rule, is never allow a small loss to turn into a big loss, because it's a numbers game. You're trying to get enough big successes, big trends, right, to make serious money. But on the way, you're going to have a lot of failed trades, ones that look like they were going to be good, but then for whatever reason just collapsed. And those are going to cost you money. And so you want them to cost you as little money as humanly possible. Because if you have lots of big losses, if you just don't sell and allow the thing to go down and down because you're like, oh, I think it will come back up again, I think it will be all right. If you live in that dream world, you're going to get big losses that will cancel out your large wins. And then you're not a successful trader. What you want in trend following is some big wins and lots of little losses. And those are very painful to take until you get used to it, because nobody wants to keep losing and going, oh, I've lost again. Oh, I've lost again. Oh, I've lost again. It can sap your confidence if you're not sort of aware that what you're doing is part of the overall system and is a necessary part of it.
You're learning. Are you learning by your mistakes? I mean, is that what
Yes.
happened to you then?
Yeah, learning from mistakes is all part of the game, and that's why it tends to take 4 or 5 years for a trader to become consistently very profitable. Anybody can have a good first year, beginner's luck, even maybe a good second year if they're in the middle of a strong bull market. I saw that in crypto the whole time. All these people would appear from nowhere on Twitter showing off about how they'd turned £1 into £1 million or whatever. Bit like me with my 3,000 into 100,000. The difference being that I used that as a springboard to actually become a proper sensible trader. Whereas a lot of these people, not all of them, but probably most of them, they turn 3,000 into £1 million and then they turn £1 million back into 3,000 again once the bull market's ended, because they never know it's ended. They never want to admit to themselves that the good times are over and that they have to sit on their hands for 3 years or 4 years or whatever until there's another strong bull market.
Yeah.
So instead, they keep trading on the way down. They might, be buying things and they're like, oh no, it's still going down. And then eventually they'll switch to shorting because they think, oh, well, the market is going down. But then the market will have a massive rally, which is what always happens during bear markets. And then they'll be caught out with that, and then they'll lose more money. And I've seen it happen to so many people, just, rags to riches and back to rags again. You have to be pretty disciplined in this. So it's not simple. It's certainly not a simple mental and emotional game. In fact, it's one of the hardest games there is, because you have to conquer your own feelings and your own fears and your own greed in order to become a mature trader. A mature trader is not sweating all day, banging away on their keyboard. That's not a mature trader. A mature trader is somebody sitting back, confident in their own system, that they know how to do things, happy to execute sales of trade after trade that are unsuccessful, small loss, another small loss, and just kind of be philosophical about that, at the same time as having some big wins, which again, you mustn't get too carried away with. You've got to control your emotions in this game, because if you get too excited about the big win that you've had, then you might be tempted to hold on to it for even longer, or conversely, you might get so excited that you're like, I have to cash it in, and you cash it in early and the trade actually had a lot further to go. One way or another, emotions tend to be the biggest stumbling blocks for traders, and indeed for investors. I mean, even you doing investing on a long-term basis, I'm sure your emotions have got in the way of you making money on many more than one occasion. They do for everybody.
Absolutely, certainly has. It's, in all of that, either buying the wrong things or selling at the wrong time, or much of the time holding on for too long. for certain things. So yeah, absolutely. And I'm just thinking, when you started, obviously, I'm just thinking about actually an interview I did with Ben Elton years ago, and I said to him, "Is there a way around um, doing comedy in front of an audience to get better? Is there anything you can read, anything you study?" And he went, "No. All you've got is doing it going through the pain of doing stand up in front of a live audience. That's the way you're going to learn." But with you did read a lot of books, and you did a lot of studying, but still, I'm guessing it was the actual doing of it that ultimately taught you what you know now.
Yeah, absolutely. Because until you get into real trading, and that doesn't mean paper trading where, you're trading a demo account and pretend money and all. Well, I mean, that is useful, but it's nothing like the real thing. Once your real money is on the line, your emotions will take over to some degree inevitably, and then you have to learn how to sort of deal with those emotions, which is a whole other game. I mean, I've got chapters on psychology in my book because it is so damn important for making money, and yeah, reading about it is the start, because then you can be aware of what the pitfalls are, but then you've got to experience those pitfalls in real life to some degree. The beauty is that if you read about it beforehand, then you're already on the lookout for those emotional pitfalls before they hit you. And once they hit you, you recognize them for what they are. And that hopefully will sort of short circuit your desire to lose money, because that's what it is. It's a desire to mess up, a desire to lose money for all kinds of deep reasons. And the main reason people have the desire to mess up while trading is the deep desire to be correct, right? Most of us just want to be right. We can't bear the idea that we've studied a share or a crypto and we are sure that it's going to do well in the future. How we can know what the future is, I don't know. But once you've studied things, once you've studied a crypto for that long, you're like, I don't see how it can fail. You start to think to yourself, and of course it can, but you feel that way. And then you buy it, and then the price doesn't go the way you expected, right? So what does a rational person then think to themselves? Do they think, oh, I must have got it wrong? Well, what most seemingly rational people think in that situation is not, no, I must have got it wrong. The price must be wrong. Why is the price falling when it should be rising? Oh, I know, it's the manipulation of those damn insiders. They're always trying to push the price in the direction I don't want it to go. People start thinking along those lines, conspiracy lines, that kind of thing. And they will rationalize in their head why they shouldn't sell the thing that is falling and falling, and they're losing money and losing more money. Because they don't want to admit they're wrong. And what's more, the larger the loss gets, the more you don't want to admit you're wrong, because the bigger the loss gets, the more painful it will be to take it on the chin and go, I'm cutting this loss, I'm getting rid of it, and there's no way I can ever it's ever going to recover, because once you've sold it, it can't recover, right? And that's an incredibly painful thing to do. And that's another reason why it's so important to cut losses while they're still small, because then it's less painful. The longer you leave it, the worse it gets when you eventually have to cut it loose and take that big loss on the chin. So the thing is that it feels rational at the time to be expecting it to go back up because you've done all the research and it seems like the best thing. But in fact, what you have to do is override that feeling and admit to yourself that there are some things in this world we can never know. There are mysteries. And one of the mysteries is, why the hell is this crypto going down when I think it should be going up? Because more often than not, you'll find that crypto that started going down will carry on going down, and it will go down and down until it reaches zero. And you'll just go, well, how can that even be possible? It had so much potential. And the reason is nobody cared about its potential. Okay? It lives in the real world, this piece of technology. It may be a great piece of technology, but if nobody's interested in it and nobody's buying it, then it's not going to make you money. That's it. That's the end of the story. And sadly, that happens a hell of a lot more often than you would expect.
And speaking of crypto, because we've been talking about trading generally, following trends, maybe shorting here and there, keeping a lid on your emotions, etc.
Mm.
And it's kind of all of that on acid with crypto, it seems to me, because whereas shares are volatile, everybody says, oh, shares, they're volatile. Crypto, incredibly volatile. But I assume that means that you could potentially make big money or bigger money on those than you could on shares. Or is that the case?
Yeah, I mean, crypto has been a great friend to me. The greatest trends I've ever seen, these massive booms and massive busts, perfect for a trend follower, which is why I latched onto it so early. Um, and what's more, another benefit for a trend follower is that, as you can see, I'm highly skeptical about fundamentals, not skeptical that they exist for shares, but skeptical about how much impact they may have on a price, and also how predictive they are.
Yeah.
Because of course you can, so let's sticking with shares for a second. Let's say you buy a company and it's got fantastic fundamentals, and you're like, oh well, the share price is definitely going to go up. That's all very well thinking that, but the fundamentals are always lagged. You're always finding out how the company was doing 3 months ago rather than how it's doing right now on the ground. So, you buy a share and it's got fantastic fundamentals, but 3 months later there may be a profit warning and you lose your money. But you didn't know that was going to happen. There was no way you could have known, but the chief executive knew. He knew, or she knew, So yeah, I'm always skeptical about how predictive fundamentals are, but you're quite right. In the crypto world, they're usually meaningless. Meaningless, right? And so that's great for someone who's skeptical about fundamentals like me. And it's so hard to try and explain to my readers who write to me, even after they've read me banging on about all this in an entire book, they'll still write to me and go, what do you think of this crypto? Look, the fundamentals look fantastic. And I'm like, well, yeah, but its price has just been falling and falling forever. And it might just continue to fall. And they're like, yeah, but surely it's got to go up at some point. And I'm like, didn't you read my book properly? Read it again. Because that's the thing, is that they often just don't, and they fall out of favor, and that's the end. And some other new technology comes along that's slightly better or even slightly worse, but for whatever reason it just becomes more popular. It's that classic tale of VHS and Betamax, right?
Yeah, I was just thinking about that, VHS and Betamax, because if you took the fundamentals, you would have put everything into Betamax, obviously, and yet VHS was the one that won.
Exactly, and which one was proven to be the best? Not just proven to be the best in a theoretical sense, but also in a practical sense. Beta, because when I was working as a TV reporter, we were using Betamax tapes for everything. That's the broadcast. Well, it was until 15 years ago or so, the broadcast standard throughout the entire developed world. That's how wonderful Betamax was. They wouldn't have dreamed of recording TV programs on VHS. I mean, it's a pathetic format. And yeah, as you say, it won the entire consumer market. So you can never be sure what's going to become the big success. And that's why when people, you must have come across people who are sort of fanatical about Bitcoin, right? Who are sort of religiously attached to it as the savior of the world.
Yes.
And, I can see the argument. Of course, I've made the argument myself enough times about, when I'm asked to, if I go on a TV spot on BBC or Bloomberg or something, and they ask me, to steel man the argument for Bitcoin, I can do that, and I can give you a damn good reasons why the global financial system might collapse in the next 10, 20 years, and then Bitcoin becomes the global reserve currency. But it's just one of many possibilities, surely. And that's what the Bitcoin fanatics can never seem to see. They're just religiously obsessed with it. They're just like, no, it will become worth $1 million and then $10 million per coin. And, of course, every time there's a new boom and the price goes higher than it did in the previous boom, they feel even more vindicated. But just because that has been happening up to a certain point doesn't mean it's destiny that Bitcoin is going to take over the entire world. There are major, I could go on all day about all the issues, so I won't. But, one thing, for example, is you think the US government is going to just put its hands up and go, yeah, okay, Bitcoin can be the global currency. No, they will put up the biggest fight that you've ever seen in your life, right, to stop Bitcoin. They will if they have to, they will ban Bitcoin, just like, as I'm sure you know from your history, they banned gold in the
Yeah.
1930s, right?
Yeah, exactly.
They might ban Bitcoin to stop the same thing. They banned gold because they were worried that people were buying too much of it because the whole US economy was looking so shaky. So they were
Yeah.
like, okay, well, we'll just stop people from owning it. It's as simple as that. So they could do the same with Bitcoin. So that's one major potential roadblock, and there are many others besides, of course, and not least the fact that Bitcoin is now an extremely unfair economy, in the sense that there's just a handful of people who own an enormous amount of Bitcoin now,
Yeah.
right? So if you're going to make it the global reserve currency, how do you kind of square that with the fact
Yeah,
you're
yeah.
starting off with effectively a brand new currency? Here's our brand new currency for the world. Oh yeah, by the way, 100 people own most of it, but you lot, the rest of the people in the world, you can have like the dregs, the bit that's left over. It's like, that's not going to wash either, is it? So they would have to kind of do some kind of redistribution of cash, I imagine. So these are just
Yeah.
some of the potential pitfalls with the idea of Bitcoin becoming a global reserve currency, but I'm still not ruling it out. It is one of the possibilities. Maybe they could find a way round to that happening. But
But you've made a lot of money with this. You're saying, crypto's been kind to you. So
yeah,
you came out of Bitcoin in 2017. You must have come back in round about
yes.
2020.
Oh, sorry, I should have made that clear. I
Yeah.
trade the big cycles.
Yeah.
So Bitcoin tends to have 4-year cycles,
Mhm.
though that's slightly variable.
Mm.
It varies based on, and it seems to be becoming more variable, put it that way, but not hugely. Originally, the Bitcoin cycles were always based around the cycles, the 4-year cycles. That's what it used to be based around, the halvings that happen every 4 years in the world of Bitcoin. Every 4 years, there's a system where the amount of new Bitcoin that is produced halves in size. So basically, you're getting new Bitcoin coming out in a smaller and smaller trickle as time goes by. And because there would be these step changes in how much Bitcoin is produced every 4 years, that seemed to provide an anchor that, because there aren't really solid fundamentals like profits and revenues that you would get with shares, it seems that the whole community kind of settled around the halvings as kind of an anchor for the ups and downs of the market. As I say, that has started to change in recent years. It feels like the halvings are not quite as central to the movements of Bitcoin as they were, but nonetheless, we still get these approximately 4-year ups and downs. So I trade those cycles like a good trend follower, buying each cycle after it's bottomed and selling it after it's topped. And so, in between, each time there is several 100% to be made in profit, or even several 1,000% in the early years. So there is lots of money to be made, but I'm out at the end of each cycle, and then I can sit on my hands and wait for Bitcoin to get all the way down to the bottom. And when we say down to the bottom, every Bitcoin crash is something like 80%, 85%.
Wow.
They vary slightly, but, and for most other cryptos, you're talking 90, 95%, even
Yeah.
99% losses before they then start recovering.
And
So
I was going to ask, yes, about the other cryptos. You've got a few that have been around for a while. They look like they're going to stay. Things like Ethereum, particularly Ripple. XRP.
mm,
There are a few of those, but there are thousands that some of them go big and then they just go to nothing. A lot of them don't go to anything. Do you look at any of those? How do you deal with the
yeah.
Bitcoin coins?
Yeah, I buy all the so-called altcoins and uh, smaller cryptos. I've bought and sold loads of them over the years, and I describe quite a few of the buys and sales in my book. Um, so you can see how I sort of latch onto these tiny little things that nobody's heard of, because I like the look of the chart. I like the way that they're heading. They're gaining sentiment. People are talking more about them. They've got great technology. Great technology is always a huge plus because it makes it much more likely that people will, as it gains sentiment, people are reading about it and going, oh, actually, this is a good technology. Okay, I'm going to buy some of that. Because there are a lot of people who know what they're talking about in the world of crypto, technology people. And so they're on the lookout for good technology. And so that's always a good starting point. But as I say, it's not as solid in the way that revenues and profits are for corporations. So instead, in the crypto world, you're basically, one analogy I like to use is it's like you're a dragon in Dragon's Den, right? You're looking at early stage startups and trying to decide, shall I stick my money into one of these early stage startups that may go absolutely nowhere, or should I not? But the difference between you and the dragons is you have the benefit of a crypto price chart. You can look at the price, you can see it's heading in the right direction, i.e. upwards. And so that gives you a bit more security that, at least you're not buying something that's heading in the wrong direction. Whereas, of course, with the dragons in the den, they literally stick their cash there and they usually stand to lose the entire lot. So that's an even more extreme kind of way of investing, that sort of venture capital style investing. This is kind of one step back from that, I suppose. You're buying tiny little things. Nobody knows whether they'll ever be successful or not. I use one example in my book of a crypto that I made several 100% profit on, a huge profit on that one. And and since I sold it in 2018, or at the beginning of 2018. So it was one of my big winners of 2017. After I sold it, the price just carried on going down and down and down and down. And, I would have lost almost everything. And I say almost because the thing still exists. And what's more, the technology that it was based on, the whole project was actually pretty good. And it's still a website and it's still got subscriptions for people to learn. Basically, it was data about financial instruments, just a platform to sell you data and information and analytical tools for analyzing markets and cryptos, right? And there are lots of successful sites doing exactly that. This just happens to be one that hasn't become very successful. But why? I've logged in, I've looked at their tools, they look just the same as the ones on all the other websites, but for whatever reason it just hasn't done well. But the beauty of trend following is you don't have to worry about that, because I was out near the top and I didn't have to go through the pain of it going down and down for 5 years or whatever it's been, 6 years. Because however wonderful the technology and the platform and the website are, nobody was interested. And so I'm out.
So if somebody wanted to start to try to make money as a trader, crypto or shares or whatever, we've already said that they need to have a goodly amount of cash to live off, while they probably lose quite a lot in learning to trade over a year or so. But other than that, what would you suggest they do? Obviously, get your book. That's a given. The Crypto Trader.
Well, you can't even trade if you haven't got my book. You shouldn't even, your computer by rights shouldn't even turn on if you haven't read my book.
Frankly, yes, that's what I was thinking. You just know one if you haven't got Glen Goodman's book on the Crypto Trader. Exactly. So you've got to have that. And then there are a few other books I would imagine that you would recommend that people read. Obviously, nowhere near as good as yours, obviously. But,
Yeah, I've read so many books, but the best ones are like the classic Jesse Livermore, Reminiscences of a Stock Operator. He's the guy I mentioned earlier with the top eighth and the bottom eighth. That was written in 1923, but believe me, it's still as good as ever. Probably the best trading book of all time. So that's Jesse Livermore, Reminiscences of a Stock Operator. I'd also recommend Mark Minervini's books. Mark Minervini is an excellent trader. He's still going. He's still on Twitter. He's still a big name. A lot of it is similar to stuff that I wrote in my book, but not similar enough that it's not worth reading both. Even if you've read mine, there's more to learn from his, particularly as he doesn't talk about crypto at all. He's only into stocks and shares. But he trades not exactly as a trend follower like me, but sort of in a similar way. Um, in terms of starting as a new trader, to answer that question, yeah, you need some money, but what I would really, really strongly recommend to people is to hang on to their job, whatever it is, for quite a long period,
Mhm.
preferably years rather than months,
Mhm.
because it does take a while to kind of reassure yourself that you know what you're doing. And when you do give up your job, it's a real psychological shift. Suddenly, there's nobody to blame apart from yourself, and that's scary. You can't complain about your boss anymore. You can't you can't rely on the pay packet that's coming in once a month. So it's a lot more stressful to suddenly be on your own. I have to make a living from trading. Obviously, it's better if you're living in your mum's basement. Better if you're living in your mum's. I've
I
never said that phrase before, but I guess in this situation, it really is better if you're living in your mum's basement. If you're not paying rent and you can play with money that you've got, if you're 20 years old or whatever, then you can do some stupid experiments and even lose your savings a number of times, as I did when I was very young, um, and recover from that. But
Yeah.
if you've already got a family, like I did when I gave up my job, then a lot more caution and care is required. And you can only, as you quite rightly said, build up supplies of that caution and care and experience by doing it, by trading for a long time.
I'm
Even if
guess
you've already read books, you just got to do it
yeah.
while you got a job in your spare time. Try not to go bankrupt, and just learn from your mistakes. Read a lot about risk management, which you read in my book and you read in Mark Minervini's book.
Mm.
Jesse Livermore actually is a fantastic example of why it's so important to manage your risk, because he became one of the richest men in the world from nothing. I mean, he was literally a boy grew up in poverty, becomes a trader in the late 1800s, just in these local, what we'll call bucket shops that existed, becomes one of the richest people in the world, then has some bad trades, loses everything. So he's lost everything. And then recovers with a loan from here and scrounging a bit of money there, becomes the richest man in the world again, or one of the richest men, and then loses it all again. This happened to him several times in his career. And here's because risk management was not understood properly in those days. That's only really been developed in recent decades, and that's why it's so important to read modern books as well as the old ones, whether it's mine or Minervini's or anybody else's. There are lots of books that will teach you about how to manage your risk, i.e., keeping the size of your trades at a level that is large enough to be meaningful if you make profits,
Mm.
but small enough to not risk ruining you,
Yeah.
right? So
Mhm.
if there's a kind of a sweet spot,
Mm.
and that sweet spot can be calculated mathematically. And that's what risk management is all about. And that's what Jesse Livermore didn't know about. And so the sad end to his story is that after becoming one of the richest people in the world and losing it all over and over again, eventually he took his own life because he just couldn't handle um, the emotional
Yeah.
turmoil that it was putting him through.
Oh, I'm so sorry about that. Yes, and that it's a good warning. So finally, Glenn. I mean, we could talk for hours about this, but I suggest people read your book first, and then we'll go and we'll have I have to get you back in again. We'll talk a bit more
Yeah, I'd
about
be
the.
happy to.
That would be great to have, really look at the nitty-gritty of actually making trades or not making trades, etc. But finally, and I'm thinking particularly about people like me who had never traded. I mean, I'm a buy and hold kind of a person, but I'm thinking, ooh, I probably ought to consider this. Is there any technology that we should have to start off with? I mean, can you just use AJ Bell or eToro to trade on, or
Pretty
Coinbase?
much, yeah. I mean, most of my trading has been either within ISAs or spread betting. The various spread betting platforms in the UK are wonderful because you don't have to pay tax on your winnings, and that's very important. And in fact, yeah, I mean, it's really doable in a tax-friendly way,
Yeah.
because obviously the allowances have been very generous in this country for a number of years now. The ISA allowance each year, and also with spread betting, there's effectively no ceiling to how much money you can trade on those platforms. And of course, there are commissions to pay, and there are downsides to those platforms, certainly. Um, Particularly that you have to borrow money from them and pay an interest rate. So, there are various downsides. But as I say, being able to not pay capital gains tax is a big bonus. And we're one of, I think, possibly the only country in the world where we're allowed to do this, where we have this tax advantage. And people, I don't feel, take much advantage of
Yeah.
it.
I
Um,
I suspect it's gonna be taken away, but,
Well, here's the thing. People have often asked over the years, why don't they close this loophole?
Mm.
And I think the reason is, I've never had this absolutely proven to me, but the word is that more people lose money spread betting.
Right.
I mean, it sounds bad, doesn't it? Spread betting, but
Yeah.
effectively you're just buying and selling shares and other financial instruments, much like you would on AJ Bell or wherever. And that's how it looks to you on the screen. And, the prices are pretty similar and blah, blah, blah. Except you don't pay tax on the profits. But yeah, most people, so I'm told, lose money doing it, right?
Right.
So,
Okay.
so if the government closed it as a loophole and people were making those same trades on non-spread betting, if they were just doing it on a normal trading platform, then those same people would be building up big losses that they can then offset
Offset.
against their taxes, right? So if more people are losing money than making money on spread betting, then the government is better off allowing it to continue.
Right. That makes sense. That does make sense. It's a mad world, isn't it? Well,
Yeah.
Glenn, thank you so much for explaining that. I mean, there's a lot to take in, but anybody I think who's thinking they might like to follow in your footsteps, start to make some money on the side and then make it a full-time thing so they can stay at home and support the kids and everything and still be around. It's been a very, very helpful session. So anybody who's
Oh,
interested,
I'm
sorry.
just going to say one thing before
Yeah,
you
do it.
wrap up, which is just to make the point, because some people might be wondering, here I am going on about making a living trading, but at the same time, it's like I've got this book to sell. Well, just so you all know, I make virtually nothing out of this book, okay? Because I have a publishing deal with one of the big publishers in the world, and as anybody will know who who's
Yeah.
written a book and gone through a big publisher, you only get a little percentage of each book sold. So even though I've sold a fair number of books, it's like it barely helps me financially, right? Nearly all the
Absolutely.
money that me and my family have lived off and paid for expensive holidays and all the rest of it over the years, nearly all of that has been made trading. And I'm proud of that. That's why I'm saying it so loud. I'm proud of that. And I'm not somebody selling trading courses and all the rest of it. I haven't got anything like that. I just wrote the book to help people, and it gave me a little bit of pocket money on the side. And so there.
Yeah, exactly. I know. I do know what you mean. I've written 38 books, and yeah, I do know that it's not really very much in the way of profit from those. But it's
No.
fun doing them, to be fair. But thank you, Glenn.
Oh, you were going to ask. Sorry, you were in the middle of asking where they can contact me or something, I think,
Well,
weren't you?
yeah, we can get your book on Amazon, can't we? The Crypto
Yeah.
Trader.
Other
And
than that, I've just got a website, glengoodman.com. It's just my name, Glenn with one
great.
N. And
And you're on
and I'm on
Twitter.
Twitter as well. I've got a little kind of friendly little community of people on Twitter where we all discuss, what's going on and the latest in the markets, and I give a bit of trading not advice, that's the wrong word, isn't it? Because I don't do
Information.
financial advice.
Yes.
Trading education and information. Yeah, exactly. I never actually advise anybody buy this, buy that, or anything
No,
like that,
you
because
can't. No.
I don't think I'm
Exactly.
allowed to, apart from anything else. But I wouldn't want to anyway. I believe in helping people learn how to do it themselves and then
Themselves.
make their own decisions. That's my aim.
This is a very good point, and thank you for the reminder, because I do always have to say that nothing that has been said on this podcast should be taken as financial advice. It is financial information only. I say it over and over, but it's one of those things that we have to say because frankly, it's true. This has been the Money Magpie Invest podcast with Glen Goodman, the crypto trader, among other types of trades as well. I've been Jasmine Birtles, founder of MoneyMagpie.com. Like, support, send all your friends, tell your friends, do remember to subscribe and follow us all on social media as well, because you want to. See you next week.